Hey, it's Sasha Evdokov. Welcome to May. It's May 1st, 2014, and today we're doing the rapid recap. So I do want to cover some stocks and just give you some insight to kind of what the markets are doing. I think the market is more of a stock picker's market right now, and we're moving a little more sideways or even more down. So we'll get into all that in a minute. Just a couple of quick announcements for those of you that follow closely. I did put up a promotional video for the book. So if you purchase the book and you want a video lesson that goes along with it, I think the video lesson, after looking at it, by the time it was finished editing and everything, it was about 48 minutes long. So it's a really good lesson. If you prefer the video format, the lesson in video format goes in much more detail than the book does, and we cover probably 25% of the book in that video lesson with different examples, different concepts, maybe just to make you think a little differently. And some people like it in a different medium, meaning some people prefer to read, other people prefer the video. But I will tell you that the video does go in more depth on all of those topics that I cover in the video. And like I said, it's about 25% of the book. So, and I'll give you an example. If you haven't got the book and you need to have the book in order to get the free video lesson, it's not going to be available to anybody else for that matter, unless somebody gives it to you or something like that. But I'll give you a quick little example from the book. So, for example, Number 68, we have the stock trading tip of set up your risk and reward strategy before entering your trade. And when you read these things from the book, you want to think about what's being said, what does it mean, and how does it apply to you. So by the time you're done reading them, after each tip, think about it. What does that mean? What does it mean to set up your risk and reward strategy before entering any trade? And I'll give you an example. Let's just pick any stock. Let's just say, I don't know, CMG. Okay. So here we're looking at the stock CMG, and let's just say we're forced to get into CMG. Okay. And here we create a trend line. We do our analysis, whatever we want to do. We develop this analysis, and we come to the conclusion that if we look at the weekly, okay, we have another trend line right here. So let's just say we have a risk of from this line to this line. This is going to be our risk. We're going to use this as the second line for support, or as our stop. So that'll be 435, and right now the stock is at 480. So that's a huge amount of risk, okay, in terms of what's available. Normally I do a couple dollars, but let's just say this is what your plan was. Okay, so we have 482 or 480 to about 435. So what is that? You got about 50 points. Okay, so from here now we're expecting a bounce. If we look at the daily, we're saying, okay, it's going to bounce. Let's just say in theory we anticipate it's going higher, and we can say that it'll go all the way up to here. So looking at that run from here to here, we have a 136 point gain that's possible. Okay, so we look again from here to here, we have let's see, a 43 point possible risk, but our reward potential is 132 points. So again, getting back to the book, tip number 68, set up your risk and reward strategy before entering any trade. Does the risk versus the reward pay off? Yes or no? And it's something that you have to think about before entering any trade. So that's just like a little insight from the book and what it's really meant to give you when you're reading this. It's meant to give you some ideas and thinking concepts when you're going through the book, okay? So if you go and watch this promotional video, if you're interested in the video lesson that's about 48 minutes long, 48 minutes long, then follow the instructions in this free video, and you'll get that free video lesson as well. So And that's only for the people that want the book, and you can pick up the book on Amazon if you just go to 100 Stock Trading Tips and purchase it. It's right here, and go through the buying process. And I made it as cheap as possible. I think it's listed on my account for $8.50 or something like that. Then Amazon gives you a discount break, and you know, and when you purchase it, I think the amount of money that I make on it is about $1. So you know, I didn't write it in order to make a profit. Instead, it was more to give back to you and get you to learn something. And a lot of things that are in this book, most people will not cover or tell you, because there's a lot of insights behind it. And just kind of use the strategy that I just discussed to get more out of the book. And the video lesson is even there to help you take that trading further. You know, most people want you to buy a big product and then give you like a little book as a freebie. And in this case, it's completely the opposite. You know, you get the book, I'm going to give you a nice video lesson. And it's a very good video lesson, almost a full hour. So there you go. Check it out. I'm not going to promote it anymore. I want to get to the recap. It's up to you if you want it. If you want your trading to get better, then check it out. It's less than 10 bucks. So anyways, with that being said, let's move forward to the recap and actually get started. I'm not going to cover a ton of stocks. I want to talk about in general the market, because I haven't done that in a while. So for some people that are looking for the general market scope, the thing is right now we've been isolating for quite some time, and today we were down 23 points, which is not a huge movement. What's been happening is we're moving in this sideways pattern. So normally what I like to do is, where has the market been? Okay, so where's it been? So if we look at from the 2000 to 2015, you can see that, you know, we started to go down, came back up, dipped down, there was the huge drop, and now we've been heading higher. Okay, so in terms of the long-term perspective, we've been heading higher, but you know, most people do not trade actively on a 10-20 year timeline. So if we look at the weekly, right now I'm looking at the weekly, again, in theory we've been heading higher, and this is our major support line or level. If you want to try and get it as close as possible to hitting as many points, it's very difficult to do so. So I usually use the lowest points, and then it typically, if it moves a little away from that, it comes back to those points. So again, it moves away and then it comes back to that point. So now we're moving away, and it can come back again. So you can see it does it every so often. So as we move and zoom into the current area, which is kind of relative to our day-to-day lives and trades, because this is what really starts affecting us, is you can see that this pattern right here has been very much a consolidation pattern. And we did have a little blip on the dip here on the weekly, but then it came back there. If we look on the daily, you can see here again how it's been consolidating. So we'll have these little points of sell-off and then bounce. We've had sell-offs and then bounce, but a lot of times I've been doing more shorts over the last few months than actually longs, because after it did this major sell-off right here, this was kind of the key that, okay, the market is not as sustainable or as healthy as it used to be in a way for that time period. So instead, every time these shorts came in, this is where I would do the short selling. And you can see that we had one hit here, we had a second and third hit here, and a fourth hit now is kind of coming there again. It doesn't mean we can't go higher. It's just right now we're in this consolidation trend period, and this is for the Dow. And if you look at the S&P, it's also quite similar. So again, here you can see we have a couple of points. We had a little sell-off here, and then as we look at it closely, we had 1, 2, 3, 4, about 5 little points that have been hitting all on those on that major trend line. It's very similar, so it looks very similar to to the Dow Jones in terms of this consolidation pattern since about January. So right here, we're kind of moving sideways, in my opinion, for the midterm look or outlook. Again, if you're trading more on a day-to-day basis, then you're looking for more volatility and you like stocks making a lot of movements. If you're doing more swing trading, this might be more of a pain in the neck to trade because you're not going to be able to find great quality stocks unless you're really a good stock picker. So normally, if you just got into the market around, let's say, February, March, and you're just new to the industry, then this might be a tough trading time for you because you'll see a lot of stocks heading lower, they're not heading higher, and then you're wondering, why am I doing this? Should I be doing this? And you have to remember that this is a long-term game, and you won't win it overnight. In fact, it's not a game that you win. It's a game that you enjoy and enjoy playing so that you can enjoy the other parts of your life. So, me personally, I like the way things move in the markets, but you don't just trade these stocks right in this area if you're new. I would probably be a little bit more in cash until things maybe start heading to the 1900 levels and things just start shooting up, or the other way. If they start heading down, you can probably play to the short, but if you're new, you probably would not want to do that. So also the NASDAQ composite here, if we look at the overall trend, again, in terms of the overall trend, it has been heading higher, but now we have these couple of pullbacks that have started to happen with heavier volume, and you won't see a big difference because already it's at 43.7 million and here it's 46 million. So the other part was 39 million when it was heading higher, or 33 million. So it's quite a few million higher on the pullback, even though the spike difference is not that huge. And if we look at the weekly, you can see that we're starting to create this little downward channel or pattern, and we are hitting this level of support here. So in terms of a shorter time frame, if you look at a lot of stocks, they are kind of due for a bounce, especially if you look at things like a Netflix. They've been heading lower for quite some time, and they are due for a bounce, but the market can usually head much lower than anyone can expect. So I'm just trying to give you an overall outlook of the markets currently. And right now, if you look at it, especially on the composite here, it's been heading technically lower. It's making higher or lower highs and moving in this direction. So always pay attention. Is it making higher highs or lower highs? And right now you can see it's making lower highs. So it's moving up, but they're making lower highs. So if we move up here, it's one high, the second high is lower, the third high is lower, and it keeps selling off. So in this time frame on a monthly scale, we're heading lower, but we're coming into this triangle pattern, and things could change around here, either to the upside or the downside. We're in that consolidation phase. And also the other thing I like to check is the RUT, the Russell 2000, Russell 3000. So again, here, if we look at the weekly, it's been heading. Here's our major support level. We got a little descending pattern right here, it's multiple weeks, so it's a couple months technically. So that's why I've been the last couple of recaps have been mostly to the short side, and that's where I've been at. And you can also check the IWM for that as well, for the ETF, if that's what you're interested in. But the short term to the downside, longer term perspective, you're looking okay, but it is breaking these levels. So the Russell covers a lot more stocks. The S&P covers just 500, obviously, and the Dow Jones is only 30. So, you take it all into consideration and you say, okay, this is where the market is right now. And then you start looking at your individual stocks like a Netflix, and you see, okay, for the week, where has it been going? Where is the pattern? In general, longer time frame, right here, it's been heading higher. But then, you know, it had a huge break. If we take a look at the daily, you know, here was our pattern, broke it. Let's be a little cleaner here. So our pattern broke it, started selling off a little bit lightly, extreme sell-off right here, and this was where it was time to go short, because the 50-day broke. It broke this major support level or even resistance level, and even if you missed it a little bit, you could have went short even a couple days later, and still the sell-off continued for another 70 points. So you don't have to enter stocks right away. They give you multiple opportunities, and here's another opportunity right here. This was another opportunity. It tried to go higher, continued to sell off. You know, they do that. They play around. They usually hit that 50% mark. So if we look at it right here, here's our gap, filled the gap, continued, and more sell off. So you know, now that it's headed this much lower, you know, we are due for a bounce, but you have to look at the overall market and say, hey, is it breaking higher? And right now it isn't. It's consolidating. So we can go, and if we just take the Dow, we can head back to 16,000 and bounce again. We can do this, go up and down in here for, I don't know, 6 months, a year. It can happen. So what you do in terms of your trades is you can play these shorter time frames for the upside or the downside. I would be looking more, from my personal view, always I would rather short in this type of environment when it's bouncing, because what's going on, if we even take a look at Tesla here, the same thing I showed on my Twitter was that when you look at it and you look at the stock as a whole for this time frame as a trading period, here we have our highs. Okay, so high, a second high, which is lower, the next high, again, it's lower, the next high is lower. So where's it going? You know, it was making lower lower highs, and if it does break to the upside here on this pattern right here, and it breaks out, then I might look to, you know, step into the longer side. But until then, until that time period, because we do have a nice support at the 200. That's what I kept saying on the Twitter, was that watch that 200 right here. And we do have some good support right here with a little confluence, probably about $10 confluence region. And we do have that support level. And if it breaks this, let's say at 222, it might be good. It might be a good place to get in. But you have to watch the action. And right now, the volume to the upside is acting weaker. Look at all this heavy volume selling to the downside versus to the upside. You know, we had two ticks that have been green, and one of those ticks was a doji, which means the stock went up and then it sold off in the day. That shows weakness. This last tick just now went up and it continued a little higher in the day, but it's on lighter volume, and this is the weekly. But if we take a look at the daily, again, you know, we have tons of red bars heading lower, and you know, we have a few green bars where it does pop, but then it just continues to sell off. Even though the green bars look like they're on a little bit more volume, but the rest of the days, it just keeps selling off because of those lower highs. So it's following this pattern for now. And if it breaks out right here, you know, if it breaks out of this region, it might be great. But for now, it's not showing me that. So let's go to a couple other stocks. So taking a look at Expedia, you know, here, this is kind of a telltale sign, just like the Tesla. It had great earnings, you know, and or the earnings were good enough to move the stock, and you know, it's starting to break out. So what I like to do is always watch the second day for confirmation, but you can see the volume coming into this stock, and it's also moving beyond this 50-day. So this would be the kind of like a key point right around this area. And then you see, okay, what's my risk? So if I use this this line right here, if I got in it at 73, and my profit potential would be up to, let's just say it can go to 81. So it's a 7-point gain. I can get a 7-point gain and I might have a $2-3 risk. $2 risk, 7-point gain. Tip number 68 from the book. Okay, so that's kind of how you think about it, and you know, that's kind of what you're watching. Now, with earnings, you never know what will happen, and because you never know with earnings, I want to share with you some insight on this earnings stuff. You got stuff like this that happens, so we'll start off lightly. I don't want to shock you too much. We got stamps.com. Here's a major level. This is the monthly. It's major because it's the monthly, so the longer the time frame, the more major the level. And you know, it's breaking down right here. And if we take a look at the weekly, look at the heavy volume insight, and again, it's been heading lower. And now if we look at this weekly, it's coming down here, and it'll probably head down to 20 right around here. This will probably be where the stock will go and retest this level. But this is what can happen. And then if we take a look at SLM, you just don't know what will happen. This is why you take profits into strength. Boom. We had, and this wasn't earnings, this was another issue, but from 20, let's see, it got down to as low as this level, which was in 2009. So that's 1 year, 2 year, 3 year, 4 years of gains gone in a day. 4 years of gains gone in a day. That's why you peel some into strength as your stock gets moving. You know, what else did we have? Vista Print as well. Here's our weekly. If we look at the daily, again, it's here at 37. That happened in early of 2013. So a full year of gains wiped all in just a day, pretty much. So that's why you don't really play earnings. You don't mess with them. You sell 90-95% of your holdings if you do play them. You know, and that means if you got into Vistaprint all the way over here, you sell 90% of your holdings, and maybe take a gamble with the rest of the 10%. But most of the time, I mean, I lose on earnings more times than I win them. It's not anything worth trading or the headaches, because then you're just hoping and praying, and that usually doesn't work well with stocks. ABMD. Also, same thing here. Take a look what's going on here. See, it goes on the sell-off. So anyway, if we go to some of the other bigger players, we can take a look at here at Yelp. Yelp wants to bounce here again. We got some insights coming in with heavier volume. We got this 50 moving average on the weekly. On the daily, the moving average is still under it, but on the weekly, you can see that it's trying to pass it and hold this level. So it could be a critical level for Yelp, but it is bouncing, and it's bouncing pretty well. It gapped up, and that usually shows a little bit of strength. We'll see it'll probably come back a little bit to fill that gap, and we'll see if it can continue. Always look for that second day follow through, because you don't want to just enter it just one time and then there's no follow through, because always watch the second day for confirmation. VDSI also been moving well the last week pretty much, and after this break on this pattern, bumped higher with higher volume, and continued the next day, and then a little consolidation pattern right here, flag pattern, and then continuing higher again. This is a fast mover for a stock that was $8. You know, it's already at $11-12, so it's a quick mover, and that's kind of shooting up high. It'd be much more healthier if they consolidated here. Okay, if we take a look at Facebook, also consolidating in this area. If it breaks this level here, right here, this level, you know, this first level is a key area because it's the gap level. If it breaks that next level, it could go a lot lower, but we'll see. It's in consolidation mode right now, just like a lot of the other stocks or the composites, the indices. So they're in the consolidation phases, and it can bounce around here for a while, and that's healthy. That's okay, because what it allows you to do is, when you look at it like this on the weekly, what it allows you to do is it sets things up. Everybody gets their position and holds their stuff, or like their rock or their ball, if you're playing dodgeball. And then once it starts breaking out, or the command is given fire, everybody starts buying even more, and it starts heading higher. Or the other way, everybody's setting up for the short side, and boom. But you don't play in this region unless you you want to go at the highs and the lows. And you can play this, it's just a lot shorter of a play. You know, to the downside, you could have played it 1, 2, 3 times, and also to the upside as well. So it bounced here. Okay, let's just say you played the bounce. Okay, because of this right here, there was a 1 bounce, there was a 2nd bounce, and here was your 3rd bounce. So you could play it that way as well, depending on if you're a shorter term trader. Okay, so some of the other stocks, you know, they're doing the same thing as far as what I'm seeing. The big boys, you know, they're heading with this decline a little bit. Okay, so they're descending and pulling back to build either for the next run or to consolidate. So you're just looking at each individual stock and seeing what they're doing. So right now I'm not looking at any great picks for the moment. It's more of a day trading stock picking market. You know, I've been short on most of the stuff that I talked about before. It's been those same stocks. It's been Netflix, because you know, you're playing it from back here. This is where you get in. This is the area where you know, you get in, and this is where you trade them from. So now if the stock moves up a little bit, you're not scared, you're not stopped out. You know, you hold some of those shares here and you just let them ride. Even if it's 10-15%, you hold on to them, and then you set your plan up. And that's kind of what you do. And you know, that's what the market's giving you right now. But what I'm seeing is that it's very much a consolidation pattern. It's very much a pattern that's moving sideways for now. So if you're kind of new to trading or less than a year under your belt, you just want to be cautious, because we're just moving sideways right now. And if we gear up for this next leg up, then great. If we don't, then we can bounce around here, and you just may have to just be patient, or learn to day trade a little bit differently. So because the swings here in the market are very small. They're not as large as, for example, what we used to have, which were you know, multi-week and multi-month runs, such as right here was a multi-week, because we're on the weekly chart. It was a multi-week run for, you know, let's see here, 2,500 point gain, you know. But now, and we did that in how many weeks? 5.8 months. This one here, we're at 5.3 months. 5.3 months, 23 bars, and we're moving sideways. This one, we're in 5.8 months, and we had a 2,000 point gain. You see the difference? Do you see what I'm talking about? This is what I mean, is that we're not in this kind of pattern. We're not in a huge incline pattern, which is what you really want if you're swing trading. You know, right now we're consolidating, and in what I said was 4.85 months, we haven't done much comparing to this one, where we have 6 months, 5.8 months, 2,300 point gain. So that's what I'm seeing. You know, just be patient, let things break out of this channel, watch them closely. If you do want to trade, you can trade certain stocks, GMCR to the short side. I talked about this one. Look on the Twitter. Since it broke in this area right here, when it broke this was my entry area, was right here, and then I played it all the way down to actually even right here, and then I got out of it to work on the book for you guys. So anyway, and it's still continuing to fill this gap. And if you were in it, let's just say, because I know some of the followers got in it probably, I don't remember exactly, but I think it was right around here or even right here. If you got in it, you just hold on to that. Hold on till it keeps running to, you know, about let's just say 84.90. You don't want to get too greedy and go for the 83.74 or even 82 because it can bounce. But even 86, you know, you could probably hold on to it, you know, and that's what these stocks do. And that's what they're doing. These leaders, you know, they're pulling back, they're consolidating for possibly the next move higher, or possibly for a slight little pullback for that consolidation pattern that we're going through right now. So just be patient, look at the bigger picture and understand what's going on here with this relative to this. Check your risk and reward strategy and just apply some of those rules. I apologize I didn't go over a ton of stocks. That wasn't the goal for today's video like some of the other ones, but I just wanted to cover the overall market as a whole, since I haven't done that in quite some time. So I hope this was helpful and just gives you some insight into what I'm seeing. All right, thanks, and looking forward to seeing you next week. I'll probably be taking Friday tomorrow off, so I won't be tweeting about the stocks, but I hope you guys enjoy your holiday weekend, as every weekend's a holiday, and spend some time with the people you enjoy spending time with. All right, thanks again, and I'll see you next week.